What's up, amazing forex traders? This is your boy Pascal Fonjok of Avalanche FX Trading Academy. Yeah, we are here once again for our weekly analysis of XAUUSD. That's gold. Remember, last week we are on the 1 hour time frame. Last week we did our analysis and came right to this range here, and on this at this range we said we should do nothing because there was a massive accumulation of liquidity. That's orders to the upside and to the downside. So our prediction was that price was probably going to break to the upside sweep liquidity or break to the downside sweep liquidity. Whatever the case, we were to wait, see what happens, and from that we will take our position. Now, price broke to the upside with a massive bullish candle. If you go to the 4 hour time frame, the massive bullish candle that preceded the break to the upside was much more like a marubuzu, no wicks. This is an indication, a clear indication that the buyers were in total control of that market. And there's a high concentration of buy orders right here, right about this point. It's a very interesting zone, high concentration of buy orders. Okay, so he went, tested this supply zone up here. Price ranged for a while, formed another supply zone, then a bullish push to the downside with something that seemed like a marabuzu. But what happened? Amazingly, interestingly enough, when price got to these points, these same points here, there was a rejection, a push to the upside, meaning the buyers came in. The buyers are in control at this point. This is a very interesting point. The buyers came in and tried to push price, but the sellers still had control. That gave an opportunity for price to retest that supply zone, and those who were sensitive enough, who were available, must have taken buy, sell positions, and shorted the market to the downside. And they are in profits right now. Those who want to take their profits at the demand zone, which is a point of interest, or other fast day traders would have come out since the price has been ranging here. So now, interestingly, this week I want us to look at this range. This range right here is forming a massive concentration of liquidity to the upside and to the downside. But interestingly enough, the liquidity to the downside is above a demand zone that has not been tested. It's now above a demand zone that's not been tested. So there's a high probability that this liquidity to the downside, and remember, the market is temporarily bearish. It's been coming down. It's a break of structure right here. So there's a high probability that price would sweep this liquidity to this downside, test this demand zone before it shoots upward. And those who are ready when that happens, you should have the extreme supply zone as your point of interest. This supply zone right about here, because this one here has been broken. So you should be expecting to take profits here, but that will probably entail that you hold your trades for a longer time period. Those who are risk adverse will just take the profits the moment price that ranges. So, ladies and gentlemen, XAU prices are coming downwards. There's a formation of a range here. Okay, you can still do this. Oh, I remember my mentor Dapo Willis in the Forex Mastery course, Forex Mastery program. He would advise that when price breaks below this and retest, you can take a short position. So that's a bearish flag right there. So, ladies and gentlemen, it has formed. Price has formed this channel. It's going to the upside, and you see the bullish candles are much more like marabuzos. So this bearish push is more like a retracement intended. Price breathes in, breathes out. Price wants to take out liquidity to the downside before it shoots up. So the market is gonna be bullish. So if we go up to the 1 day, the daily time frame, there's a high likelihood that price would shoot all the way to this extreme supply right about here. So that's for us. Where you see this green indicator, price would become most likely become $4,721 an ounce for gold. Yep. The interesting thing here is I want us to take note of this. You see this? This is the high that was formed prior to this push downwards. And this is the low that has been formed. Okay, this is the low that has been formed. Okay, whatever price does within this range, right, is an alignment with the price action in this range. So the price action in this range has shown us that the market wants to be bullish. So we should take note of that until price breaks below this level before we can start saying, oh, gold is going, the price of gold is going all the way down. Then we'll look for our next point of interest. We'll go to the left side and left hand side and look for another imbalanced demand zone as our next point of interest. So, ladies and gentlemen, that is our analysis for gold. Analysis for gold. Summarily, we're waiting for price to test this demand zone, and when it tests this demand zone, we take long positions to the upside. Good enough. Our point of interest is this extreme supply zone right here, where price is equal to $4,470 and $4,427 an ounce. That's the range of that supply zone. Okay, many people have reached out to me and say, oh, Pascal, what about BTC? Price has begun dropping. BTC, what's happening? What's happening? Is it about a straight up moves? Oh, no, no, no. Let's look at BTC USD. I started doing an analysis on BTC USD. You know, BTC USD has been on an upward channel ever since September 2011. It's been up. It just retraced and then shoot up, retrace and shoot up. Then it came here. I want us to take note of something. This is the monthly time frame on BTC USD. Now we go down to the weekly time frame. BTC USD has not formed a double top here. Whatever we see here, there's something like a head and shoulder right here. But prior to that, there was a break of structure to the upside. You see, price came, this was the previous high. It retraced and broke this previous high and formed another new high. So now price is ranging between this level right here, okay, and this price, the point of interest for BTC USD, the range is within, oh, sorry about that, it's within BTC, 1 BTC USD equals let's take note of this price range of where is that price? Okay. There's a green line indicating the price. The price is 1 BTC equal to 49,774 and 1 BTC equal 126,308. Hey, ladies and gentlemen, don't panic. You know what? Don't panic. When price gets so high, the probability or the likelihood is for those who bought to start taking their profits. So what they're doing right now, they're taking profits. They're taking profits until price breaks this level, right? Price breaks this level. We shouldn't panic. Okay, if price breaks this level, we know it's coming down to test this demand zone right here. If it breaks that demand zone, we should know it's coming down to test this other demand zone. If it breaks this demand zone, we know it's coming down to test this other demand zone. What I'll be more concerned about with BTC USD, if BTC USD breaks this level of 1 BTC equal 15,459, I start selling. I know that it's going down. Until that time, buyers are collecting their profits. Okay, there's so many imbalanced demand zones right down here. So if you even look at the candles, each time a bearish, can't you see? Each time a bearish candle is formed, there's a weak rejection. See this resistance right here, this support. Price came down there, a weak rejection, meaning the bulls came in, the buyers came in. It's liquidity. If it breaks below here, don't be scared. Short the market to this next demand zone. If it breaks, don't be scared. This is an imbalanced demand zone. Short the market to this demand zone, just like that. Except for those who are holding for the long time frame, you can still hold until you should only panic if BTC USD gets to the point where it breaks 15,000, guys. That's when I'll say, hey, you can throw in the towel. Okay. So, ladies and gentlemen, not to make this video too long, once again, this is your boy Pascal, Avalanche FX Trading Academy, signing out.